All right. So we should be live now.
Okay, let me see if it should generate something off of Twitter I can share, right?
Yeah. Now you can go. Yeah, there's the live stream right there. So I'll repost it. You can repost it. It's on my X page right at the top underneath my pinned video. But anyways, welcome to the show, Ryan. If you guys don't know, Ryan is the founder of 717capitalAI. Follow them on X. It's a very cool and unique project on the Virtuals platform. The ticker is Wire. And I'll let you take it away for a little bit, Ryan. Just tell us about the project and, your experience with crypto and all that stuff.
Sure. Well, I appreciate you, Nick. I know that we've gone back and forth for a while. I think we were one of the earlier projects on Virtuals. We had launched in December of last year, so project's been around for quite a while. I guess I'll go into a little bit of my background and kind of how we got here, right? I started in crypto back in, I would say, like late 2018, early 2019. And when we started, I started in the banking industry, managing a lot of exchange, OTC desk, hedge fund, miners, a lot of different banking relationships that were across digital asset verticals, even software developers, things like that. And it was a mixture of kind of right place, right time, being at that bank. We were one of, I think, 2 banks in the country, in the US at the time, that was really banking digital asset companies. So we did very well there. I had experience working on our permission blockchain network. So we had built a permission network on Ethereum that allowed some of the larger institutions in our space, like, your exchanges, OTC desks, like Coinbase, Kraken. It allowed those types of entities to settle fiat US dollar 24/7, 365. The bank did not need to be open, and it was all fee-free. So at the time, it was a very innovative banking product that really helped connect us to the digital asset industry as a whole. Because you have to think, at the end of every day, if one exchange has to settle with another, they might do, the Bitcoin settlement takes however long the blockchain takes to approve it. It's fairly quick. But if you're doing that at the end of the day, one exchange owes the other the US dollar fiat side of the trade, and it can get hairy. There's Fed wire cutoffs. The bank, of course, there's processing time involved. So that network was great. It really helped us foster pretty large book of deposits at that bank at that time. I also did a little bit of work with the NYDFS and the FDIC to launch a Bitcoin collateralized loan product out of this bank as well. So we were the first S&P 500 institution to do this. We had booked a pretty sizable loan that, and then we ran into the whole Operation Choke Point 2.0 that some of us are very familiar with. And, at that time, a lot of my banking clients, they all lost their banking access. And they came to me and they said, Ryan, this is an unfortunate situation, but what are we supposed to do? We can't cash the check, that from your bank, because we can't get another bank account anywhere else. It was around that time that I think, Kraken, they had to pause US deposits and withdrawals from the exchange. Banking for the industry was just a mess at that time. A lot of people got pushed offshore, and it really restricted the US dollar access for crypto participants. So
what year was that in?
I want to say 2021 that happened. So I was at the bank for a few years. This was during the Biden administration. And, of course, I mean, our bank, we also had a relationship with the Trumps, so we were a little under fire there, without getting into all the politics of it. Short version of the story is that all of my clients, they lost their USD access. So, they came to me and said, what are you going to do? Are you going to, go to another bank? We need help in the meantime. So naturally, I had established, our business, 717 Capital, to really just help those institutions continue to access on and off ramp USD rails into mostly stable coins. People know that we settle a majority of stable coins. Every once in a while, we will handle OTC trades, your Bitcoin or Ethereum. We've done some Solana trades as well. But really, our bread and butter is just on and off ramping stable coins for those entities. It's been quite a journey managing some of these banking relationships. A lot of them, I know our business, 717, we've been debanked at least 10 times. I think
Jeez.
that we have lost bank account access, wire connectivity, things like that, all just because it really comes down to these banks not either one, they're not willing to participate in crypto. They think there's too big a risk. Or the ones that do, they see the opportunity. It's a very underbanked space, but they just don't know how to handle that risk yet from the eyes of the regulators. So what we've done is, we work very closely with a lot of different banking partners. Some of it is education, pointing out, transaction monitoring, a lot of stuff on the compliance back end is what we handle, especially for our clients and the large dollar amounts that we handle. Compliance is very important. So as we work towards a lot of our, as we work to cement banking partnerships, things like that, a piece of what we do for 717AI and the Wire token is we're looking to streamline basically a terminal that allows our holders to access as a way to just directly move money on and off chain from your bank account. It eliminates a lot of the friction at centralized exchanges. We've all heard horror stories about centralized exchanges, freezing funds for whatever reason. And the fees, at least in my world, for institutions, the fees are outrageous. They're crazy. I think, they can be anywhere between 1% to 5%, depending on where you're at. And for us, our over-the-counter, the private markets that we trade in, we don't need, we get better pricing, and in turn, that amounts to less than 1% fee for the client. So we beat them on fees. There's a lot less friction. We handle the on and off ramp pretty seamlessly. It happens in about an hour, under an hour, and users have, funds on chain almost immediately. So that's what we're looking to solve. But for end retail users, which is something that is a bit new to us, of course, being in kind of in the virtuals ecosystem and on retail Twitter, because we've always operated on the institutional side. So, that presents its own unique challenges, is trying to on and off ramp for thousands of people and getting these banks to be comfortable with, the extra KYC, the extra risk exposure, where all these people, what is their source of funds? What tokens are they trading in? So that's what we're working towards. We had announced pretty recently a new partnership with a bank in Taiwan that helps us open up some of that SWIFT connectivity for international settlement, so that when we do have a lot of our retail end users, I know they're from all over. We might have users in Europe, we might have users in Dubai, and we know we have users in the US, but we want to be able to service everybody. So, laying the groundwork for this terminal platform, which is really our end goal. It's been a long road. We've explored a lot of options. That's what we're currently working on. I know, at least in the short term, a lot of people we've been talking about buybacks and the flywheel there. I think in the immediate term, we're going to really look to streamline our buyback model. You know, we're looking at how we can do it a bit more dynamically, as opposed to kind of just one-shotting, you know, our fee revenue into a buyback from any on or off ramp that we do, in doing it a bit more strategically, where we recently saw a huge run in our token, where maybe we can establish some stable coin reserves, you know, put that capital to work, where, you know, maybe the token is a bit more extended. We can keep, you know, dripping buybacks into the token. But at this point, it would be smarter to kind of keep some reserves when, you know, if the market turns bad, or, you know, if the token needs some support, we can deploy more in those types of situations. And especially with more eyes now on our project, we want to kind of give people more visibility into what those reserves are, when our settlements are happening, not to the effect that people can front run them, but, you know, here are the buybacks, just increase visibility there, is at least what we're working on in the short term. So I'll kind of pause there. I don't know if, you know, I covered a lot. I don't know if there's any immediate questions.
That was interesting. Yeah, there's a whole methodology to like effective buybacks. It's something that I've kind of looked into quite extensively. So if you ever have any questions about that, Ryan, just let me know.
Sure.
But yeah, you know, it's very, I love your project. You know, most of us, like, we were kind of bullish on it at the beginning because we saw that it was like pretty unique, and it is. I don't think there's anything remotely close to this in the virtuals ecosystem. But of course, you know, things kind of went dead in virtuals for a while, and like 717 kind of gotten forgot about. And I know you guys, you know, have a whole business that you're working on too. So I think people were like super stoked to kind of see you guys come back and say, no, we're taking this token seriously. And, you know, we want to make sure that we, you know, provide value to our holders and all of that stuff. So I'm very bullish on the project. How have things changed for 717 as like the regulatory landscape and the legislature has become, you know, a little bit more crypto friendly in the past year or so?
Yeah, it's a good question. And I mean, short answer is things have changed tremendously for us, you know, even in how our banking partners will engage with us, and you know, what certain banks are willing to take on from, you know, a risk perspective. But even before this whole thing, you know, even before the new crypto friendly administration, banks were really, like, crypto was treated very similar to how a bank would treat firearms, tobacco, even fireworks. So, you know, all of those things are legal. But from a banking perspective, it's just very high risk. And, you know, like, for a bank to kind of try to understand the crypto and the new industry, it takes a lot. But this administration obviously has been leading that charge. And it's opened things up for us a lot, at least on the banking side. We see the market doing great, which is always a plus. So yeah, things have been good.
That's awesome. It's kind of got to be a breath of fresh air to kind of feel things open up and feel, you know, the banks be a little bit more willing to at least learn about this type of stuff and create some space and maybe even put a little bit of money into like developing a department for it or whatever. Where are you guys doing most of your business these days? Is it like US at all? Are you guys doing mostly international? Is there a specific country where the bulk of your settlements are taking place? How does that all work?
Yeah, that's a good question. So I mean, everybody on the institutional side that we do set on and off ramp for, those are all people that stem from my close network of basically my old customers at the bank that I used to work for. So those are exchanges. We work with an exchange in Canada. Those are OTC desks in Asia, some of them that we work with. And a lot of it is really just moving their money into USD, or getting them US banking access. is really what we do for them. We are starting to see, it's mostly all crypto native people that have a reason to move money on or off ramp into stable coins, and then they might go out and continue to trade it, where we don't, like, we're just the on and off, right? But now, more recently, we are starting to see domestic settlements, at least we're seeing a couple restaurants, convenience stores that they have a foreign connection. So maybe it might be, let's just say, a Chinese restaurant that sources their food from overseas in China or some, Eastern Asian country. And they sell their food. They have sales for the day in US, but they need to get money back to their vendors to pay for more food and things like that. So these types of businesses that they don't care about crypto, but it's just a vehicle that it's really their only option to get funds, cross border or back overseas to pay vendors and different things like that. So we are seeing that more. I would say a majority of our settlement is in the US right now. It might come from some of the like different countries that I mentioned, Canada, Asia, Eastern Asia. Those clients might be in those jurisdictions, but they're all wanting US settlement. So all of our operations right now is majority US. And we're hoping that some of that opens up with our recent international bank partnership. So
Interesting. So, because I've seen you guys say some stuff like, yeah, we settled like 100,000 or like 1 million. Like, what are the amounts, that does all this get like bundled into one thing and like you just do it? Like, how does it work?
sure, that's a good question. So the amounts that you'll see from our buybacks, those are single customer transactions. So that is just, us handling a transaction for one institutional customer. Now, what we're hoping to do, obviously, as we expand to retail and offer, this kind of direct on-chain terminal solution, is that we start to get into the aggregation, because we're not going to do a buyback for every single end user.
Right.
Nick, if you want to swap $100, we can't run buybacks all off of
Right.
that. But what we can do is start to aggregate it, and be more efficient in that regard. But to answer your question, the buybacks that you're seeing now, those are all single transactions, as I mentioned, and really are minimum for institutions, just because of kind of the fee savings and the economics of how over-the-counter settlements work. Right now, what we impose $100,000 minimum on our clients. So all of our buybacks to this point have been, at least 100 grand or above. We will get into $1 million settlements, few and far between, but pretty, it's 6 figures per settlement.
Interesting. And you guys said your fee is like what, 1% or even less than 1%. So
Yep.
$100,000 settlement, you guys get about $1,000 out of it. Is that accurate? Okay.
Yeah. Oh, yeah.
Yeah.
With stipulations. I mean,
Right.
per client, if one client's doing more volume, we will get them on a fee schedule, and we'll
Right.
scale down to be competitive. But yeah, yes, you're in the
Okay.
ballpark there.
And then like some people might wonder, well, how much, I don't, and maybe you haven't decided this, but like say you get 100,000, you get $1,000 out of it. How much do you plan on buying back some of the 7-1 or the wire token out of the grand that you might get? You said you're trying to do it dynamically, so it could range,
Yeah, no, that's a good question. So what we set aside for every settlement in terms of what we set aside for buybacks, is 10 basis points.
Okay.
Whether all of that will go into the buyback, or if some of that goes into our buyback, call it reserve.
Right.
We try to set aside 10 bips. So on your example of a $100,000 settlement, we would look to set aside at least $100,
Right.
going back into that. And of course, as we scale and open up international settlement. There's a lot of drivers
Right.
that we can use to change that. But also it might fluctuate, like I said, per client. So
Right.
1% is on the very high end of what we end up charging.
Right.
We might make 10 basis points ourselves, 15, 25 basis points ourselves, as 717 Capital. And then after our expenses and covering, some like, our bank partnerships and all of that, what it comes out to be is we try to set aside at least 10 bips.
Got it. Got it. And what type of volume are you guys doing now on these? And then what type of volume do you foresee like in a year from now and stuff like
Great.
that?
Yeah, that's a good question. So I think year to date, we've done just a touch over 50 million in total volume settled. What really what helps drive that is we need more direct bank partnerships. We just went through a debanking process, actually. So, that where we don't have connectivity to settle for, those debanking can take 2 weeks, 3 weeks, where a bank might say, hey, this one transaction is, we don't know where the money came from because it's crypto. We'll point them to a blockchain transaction, and given a transaction to a bank, it's like, I'm speaking a different language, so, but at that point, it's like, okay, the funds are still frozen. We can't use anything. We can't operate. We don't know when the funds will be released or if we will still even have an account afterwards. So we've gone through this. We just went through that process, and that doesn't help, our volume. So what
Right.
we've been looking into is a more direct banking relationship. I will say I've been working with some investors actually since like 2022, since our bank got shut down and Operation Choke Point 2.0. We've been looking to acquire a bank to kind of help roll up a lot of these settlements directly to a bank, and just do what I was doing at that bank
Right.
initially, and we were doing it very successfully too. So, and of course that cuts down on a lot of settlement costs for us. If we have a
Right.
direct relationship, it opens up what we can do, and it helps, our volume continue to compound. So, and a lot of this stuff that I talk about, we're talking about banks, we're talking about large institutions and dealing with different departments, and these things take forever,
Right.
and trying to manage that with the crypto world is difficult, but we've done a good job of it thus far. We have really good institutional relationships, that have stuck with us throughout this process. They're always willing to work with us in whatever it is that we're going to do. And, obviously our settlement volume shows. So we're going to keep going. Like I said, there's little things in the short term that we can do for the community to benefit some of the economics of the token. But overall, there's always stuff that we're working on behind the scenes. That's pretty exciting. Just takes a while.
Yeah, that's awesome to hear. You heard that, guys. They're trying to buy a bank.
I think we were looking into it in 2024. I mean, don't quote me on it, but I
Right.
think there
Right.
was like 3 or 4 acquisitions in the entire year across the whole country.
Right.
So it's very hard to
Yes.
do. We have great capital committed behind us. Some of our partners are going through some restructurings on the NASDAQ that are related to some of these Bitcoin treasury, raises and things like that. So, even these, you're seeing even Ethereum treasury companies are going public, and even these businesses, they need a bank to perform these strategies, right? Like their MicroStrategy, there's a bank behind them that helps facilitate those large settlements, and it's MicroStrategy. They can get a bank and
Right.
not have an issue, but some of these middle market institutions that really drive and make up a majority of the market, it's very hard to find banking in the US. So we're working on it.
So one of the things that makes me bullish on Wire is like, a lot of the stuff out there, agent wise, a lot of it's software. There's not a lot of there's certainly no agents or platforms that have these kind of ties to the banking industry. What type of licensure do you guys have to get to even do something like this? I mean, that's got to be a pretty big moat, compared to somebody else. You got not just the licensing, but the connections within the industry and stuff like that. I mean, that's not something somebody can just whip out and, easily copy what you guys are doing, at least not, the types of projects or people we see within the AI agent ecosystem right now. So, could you comment on like the licensing process and like how hard is it to get that type of stuff? I mean, I was kind of interested in that.
Yeah, sure. So, I mean, I could geek out about this kind of stuff, but to be registered to do these types of settlements, and even to be allowed to share some of the counterparty information, like we might have a bank come to us and say, "Hey, who is this person that you just settled with?" Right? And for us to kind of share like that person's ID, their social security, all of that stuff, we have to be registered as a money service business here in the States. And then you need money transmitter licenses state by state, which is a very difficult process, is where you kind of go
Right.
state by state to get a transmitter license. You need to show certain, liquidity reserves for handling these types of settlements. Every state is different. We work with a couple different liquidity partners that cover strategically some of those different money transmitter licenses for us, where we have those partnerships in place that will allow us to settle in these different states. Overseas, it's a bit different. And for our OTC transactions, it's a bit different as well. But really where our moat comes in, and where like the benefit, the reason our business exists really, is just because of how the banks just will not really touch this sector. And for us to kind of manage those settlement relationships for our counterparties, there's a reason why they would choose us rather than, go and work with someone like Coinbase, or, just settle on
Right.
and off. Why not go directly to those exchanges? It's because it kind of starts to open them up to some of this crypto risk
Yeah.
exposure. The banks don't like it. But if you're settling with 717 Capital, they're a registered money service business. Some of their partnerships all fall under these money transmitter licenses. We're all buttoned up from a compliance perspective. It's it's just a more seamless process. I mean, for us to handle, you want to off ramp,
Right.
boom, money straight in your bank account. It's much more effective.
Interesting.
And those people that come to us, they say, look, we've been debanked too. We can't seem to hold a bank account anywhere in the US. And we kind of just help manage those relationships for them. A lot of it's compliance, and a lot of it just comes back from my experience working at that bank originally, and working with the regulators, and really kind of establishing at the time. Again, like I said, we were one of two banks at the time that really helped the industry, and it grew, underneath us. So that is really why we exist, is just on the back end, is just simply because we manage these difficult settlement and banking relationships.
Very interesting. So how did you find out about virtuals, and what made you decide to launch this agent, and
It's a
like
funny
how did
story. It's a very funny story.
yeah,
So the natural progression of because you have to think, like, our business existed before virtuals. And really it's like we didn't need a token. We didn't need to go out to the public or anything like that. Yes, it helps us capture a lot more retail end users. There's a benefit to them that this is a product that otherwise wouldn't really exist, to the everyday person. But we were also, I was just thinking, how do we just streamline our settlement operations just internally? How do we automate this settlement process? Because, oftentimes might be moving it across chains, different wallets. We have to go to different OTC and liquidity venues. And there's a lot of movement internally with these types of settlements. But how do we automate this, right? And so I started looking into AI, and virtuals, kind of popped up, and I said, okay, we can do this. There's probably, a way for us to build some type of AI infrastructure, based off of whatever wallet solutions are out there, and let's kind of just explore this, right? So I'm plugging in all of this information to the virtuals platform. I'm not really a crypto before this. I wasn't really a crypto Twitter guy, right? We operate on the institutional world. So I'm plugging in all of this information to virtuals, how we want our AI to operate for our settlement operations. And I didn't know if I click this button, like, then I knew that we were launching a token, but it's giving all of this information to, virtuals and the public. And so that kind of really just launched, people picked up on our Circle partnership. And that really just launched us into this kind of crypto Twitter retail atmosphere. Which
Wow.
has been a blast. It's been a blast. I mean, I'm sure, being in the virtuals ecosystem is fun. And so now we have a whole community behind us, and we're really looking forward to kind of bridging the gap between what we do institutionally and then providing this, direct on and off ramp terminal for our end users that, again, wouldn't otherwise exist.
That's crazy. So it was a happy accident.
Kind of, yes, it was. But it was, like, it really just, everything made sense. Like, this is
Right.
natural progression for us. If we want to grow, we have to start to deal with individuals and learn how to aggregate that volume and
Right.
automate the settlement. So it made sense, and I'm glad that people have picked up on it. They're seeing the value behind our token, especially more recently. Things are starting to pick up. We're seeing a bunch of new faces in the community, and it's awesome. So we're glad to be here.
Yeah, we're happy to have you guys. Like I've said before, we don't have anything like this. It's probably one of the most unique projects in virtuals. It's not easily replicatable. Somebody else can't come in and do it. Um, Tell us a little bit more about the partnership with Circle. How does that work? Like we kind of know the average DGen kind of has heard of Circle, but they might really not know like what
Yep.
Circle does. So what does that look like?
Sure. So Circle they're just the vehicle behind USDC, right? So they control all of the minting and redemptions directly to and from their treasury reserves. So, what Circle does, and when you buy USDC, I'm sure we're all familiar, but there's a dollar that is backing that USDC token that lives somewhere in the traditional fiat banking system, whether it's a bond, whether it's in a money market account, but that dollar behind your token is there somewhere. And my relationship with Circle actually goes way back to, my banking days, where we managed a lot of those reserves for them. So you were able to directly mint and redeem a USDC token straight out of our bank. Our
Wow.
partnership with Circle, what that means is really we just have direct access to mint and redeem USDC tokens from them. So we don't have to go to a public exchange and trade USD for USDC, or, or vice versa. We
Right.
can just go straight to Circle and say, hey, mint us. Like, they mint the tokens seamlessly. That, there's no fees there really, especially, if you were to have to go to a public exchange. But that's just our partnership, is that we have direct access to Circle reserves.
That's crazy. So like what, and I know this kind of goes into Circle a little bit, but this is something that I haven't really learned too much about, but like what type of, assets or financial instruments do a lot of these USDC dollars get backed by? Is it bonds? Is it,
Yeah,
corp?
they're short-term instruments. So it's mostly like I would probably, and I don't quote me on their business, but it's probably like 30, 60-day bonds,
Got
money market accounts,
right.
where they get just paid interest on things like that. And that's how they manage the reserves behind USDC.
Is there Do you guys utilize that minting ability
Yeah, we
frequently?
do with if we're settling in USDC, if we're on or off ramping, we'll either burn if so I'll use an off ramp example. If someone says, "Hey, we have 100,000 USDC and I want it in my bank account with it as soon as possible with the least amount of fees as possible," they'll come to us. We will burn that USDC directly at Circle, and then we will immediately get the US dollars back.
Interesting. And then
So,
you divvy that out to their bank
and
account.
then, yep, and then we settle with our end client. So, and then that's where we make our spread and the
Right,
revenue that drives our buybacks. But it's nice because, again, we don't pay those public
right.
fees to source the tokens. We just have direct kind of over the counter access, so to speak.
Nice.
Yeah.
So, like we talked about a little bit before, the regulations are getting better. The legislature is becoming more friendly towards this type of stuff, and God willing, it keeps heading in that direction. Are you guys seeing some solid growth in the business itself? Tell us a little bit about your growth and the stuff's about that.
Yeah, we are, and we're expecting it to pick up a lot in terms of like volume and settlement growth with this new Taiwan bank partnership. So, everything like I mentioned, we might work with counterparties that are overseas in different countries, but majority of the settlement with those counterparties is all in the U.S. because they need this USD domestic access.
Right.
Now, they, of course, they need to kind of also manage some type of US presence, which is fine. But for us to be able to settle now internationally, or even receive money internationally, that opens up. We are hoping that our volume will probably 2x or like at least double with this,
Nice.
because a lot of our counterparties, if they're trying to get funds into the US, if we can just receive it directly from your overseas bank and convert it and get it into the US for you, then helps us tremendously. It helps our counterparties, and it opens up a whole new basically a whole new client base for us.
Right. Right.
Transactions that we couldn't handle.
So that'd be like a lot of the volumes coming from these people that are dealing in other currencies, and you can essentially settle that in US dollars. Is
Yep.
that kind of how it works?
Yep,
So
exactly. And even so, a lot of the counterparties that we work with, because they don't have direct US banking access, but they are trading in and out of stable coins, they want US dollar exposure. They
right,
don't want to have to go back to whatever euro, if they're going to hold it. They don't want that exposure. They'd
right.
rather just keep it in either stables or USD. And that's kind of where this international bank for us, if we can accept international funds from these different jurisdictions instead of kind of having to navigate around it with stablecoin, it opens up a lot for us.
You guys think that could kind of be a snowball effect too, and it can open up relationships with more and more banks after that?
Yeah,
Yeah,
we're hoping so. And at least on the institutional side, I mean, this industry, it's very tight. It really runs off of word of mouth.
Right.
You know, we know all of the large settlement players in this space. They know who we are. We might not interact with each other, but we might share mutual counterparties, you know, where if a client comes to us, they want us for the on ramp, and then they might go to another OTC desk to trade their Bitcoin or run special, you know, strategies, what have you.
Gotcha.
So, you know, it is a very tight knit group, and especially in Eastern Asia, we're hoping that it opens up a lot for us. We get a lot of new business, and you know, we know that there's a need there for this type of product too.
Yeah, definitely. It seems to be, you know, getting more and more accepted, and I think there's a lot of, you know, players in the industries, various industries that are they want to be able to utilize that type of technology, especially the on-chain stuff. And you know, there needs to be a way to, you know, basically convert stuff to the traditional, you know, dollar and then back into it. And you guys seem to be like one of the experts in that space.
Yeah.
What are some bullish things beyond the banking relationship that you guys are gunning for now? Um, you know, like that terminal you spoke of that would give the, you know, average person maybe the ability to do this type of stuff. Um, how is that in active development now? I mean, how is that going?
Yeah. So I think it's important to give a little context here, because we've had a terminal that we had developed that was retail user facing. And you know, we tried to do some fun thing. We had developed, at least on the OTC, like the token swap side, that engine for us is done and ready. We had released it. We had like a social leaderboard aspect to it, because at the time, I think back in the beginning of the year, like Kato and yapping and all of that was very big. But you know, we were just kind of working to provide the community with, you know, some fun utility in the meantime, you know,
Right.
to engage with. But obviously, it's not our core offering. Our core offering is what we're working towards, and what that would really be is, again, just a terminal for end users. Any me or you log into it and say, I have no money on chain right now. Like, you know, I want to buy this base token. I have no money on chain. I have money in my bank account. Let me just go to the 717 AI terminal, and you know, basically initiate my $100 deposit on chain. And that's the end goal that we're working towards. Just one place for you to go in and out of on and off chain. Um, in the meantime, I'm trying to think. We have some stuff. We're working on some buyback mechanics. Like I mentioned, we should have an announcement next week with virtuals. They play a role in kind of some of our buybacks going forward. But yeah, until then, I know it's a lot of just behind the scenes stuff for us, and
Right.
just the nature of our business and the organizations, the banks that we deal with. It moves slow.
Yeah.
So you know, we're always open ears to, you know, different things that we can do to bring holders utility or value, aside from our core offering. You know, we experimented a little. And I think with some of this renewed interest, you know, we will continue to do so while we work towards that larger terminal goal. We're just, you know, we're always trying to figure it out and move forward. It just, some of these things take time.
Yeah. And you know, a year in the regular world is like 10 years in the crypto world. So it's like,
Yeah. Yeah, we went through the whole, I mean, I know you did too. We were before the Genesis launch
right.
mechanisms. You know, I felt like, of course, OG projects will tell you that the Genesis launches that took away from, you know, some of the those other tokens like us, which is totally, you know, totally fine. I mean, our business, we've been through the ups, we've been through the downs. I mean, I went through we've been through debankings. I lost the bank I was working for. We went through the FTX shutdown. Our business will always be here long term. And I think that's part of the value behind our project is that, even if the market goes up or down, people are always moving funds on and off.
Sure.
So it could go up, down, left, or right. And, we would be here. Our clients
Right.
have been with us for many years. So I think that's the good thing about us.
Yeah, definitely. So, you get these big clients that are doing minimum $100,000. Obviously, at some point, you must have said, okay, yeah, that's good and all, but there's, if you could aggregate the money from thousands of degens, how that could add, like, what did you ever do any calculations or like, what do you think that market's worth servicing?
Yeah,
That's
that's a good question. And yes, we've ran a couple studies in terms of like the market and what that volume aggregation would look like. What's interesting is that we will probably be able to charge more. And I know that sounds bad, right? It sounds bad that we can charge the retail end user a little bit more. But what it comes down to is really just the economics of it, where if you're only trading $1,000, you're not going to get the same,
right,
fee value as somebody trading $1,000,000. But what is nice is that we can aggregate all of that, and at the very least, we're beating what a retail end user would be getting elsewhere.
right,
And that can help us. Of course, helps buybacks. It helps the business grow, and it's volume that we would have never had. So where a lot of that automation, if we didn't have it, I would have never entertained. Like,
right.
no, I don't want to do
Yeah,
$1,100 settlement, but with the aggregation, it really helps. It's just the tricky part is all of the infrastructure and the compliance in finding a bank that will settle all of it.
right,
Where like we're not a PayPal, we're not a Stripe or like a
right,
Shopify payments processor to have that type of conversation. I mean, yes, we do a lot of volume, but we also kind of have the not the stink, but the bias of crypto that comes with
right,
us too.
right. Now, all those little transactions of average people that add up and you aggregate them, is there like a threshold where the bank is willing to accept, like, okay, like we could confidently say, like, on less than 1% of these funds are ill-gotten or something like that? Or do they, because there's thousands of people, will they need KYC on all of these people? I mean, is there like, some type of risk calculation on, like,
Yeah.
yeah, how does that work?
Yes, it's complicated. I'll start
Right.
by saying that, and because what goes into it is there's regulations on the bank side, that they need to adhere to.
Right.
One of those major regulations was a law that was put through during Operation Choke Point 2.0 that basically said the bank needs to know the customer of every customer. So if I'm Charles Schwab, for example, or I'm a huge broker house and I have a bunch of customers that are depositing and withdrawing from my platform, the regulators, the lawmakers said it's the bank's job to know who every single one of those people are.
Damn.
That's impossible.
Yeah.
Because what if me as a business, what if I want to add 1,000,000 new customers tomorrow?
Yeah.
Then I have to kind of rely on the bank to get caught up to speed with all of these people. Then what if 200,000 of those people want to just close their account the next day, or they don't, like, it's a one and done transaction. So, these things, the goalposts are always moving, which is the funny thing about this industry. It looks like they're moving closer now. It seems like they're starting to kind of do away with some of those like reporting regulations, which
Right.
is helping us on the backside. Like in our bank discussions, it's helping us kind of work towards aggregating some of this volume. But the banks move slow,
Right.
so
Right.
it's kind of
Interesting.
it's a dance. I like to call it. It's really a dance in trying to navigate what the banks are okay with, what the crypto industry needs, and how fast it moves.
Right.
Yeah, it's what we deal with all the time.
Yeah. What do you think that market is worth? Like, how much volume do you think you could get? Say it was like everything was perfect from
Well,
degen, you know.
so I was at, like I said, I was doing this, at one point at a bank and servicing these
Right.
types of clients, and the permission network that we had built, it's called Signet. Anybody can go look it up. Signet, we had achieved billions of dollars in daily volume
Damn.
every day, which was eventually turned into that platform that I worked on. When our bank was shut down, the Federal Reserve had kind of repurposed it,
Wow.
and it's what is now known as FedNow.
Damn.
It's kind of like the instant wire platform that the Federal
Right.
Reserve runs off of. They took our platform and kind of ran with it, which
That
is,
you played a part in developing.
it is what it is, right? But I like to say
The
everything
Fed
happens.
Reserve stole my tech.
It all happens for a reason, and 717 wouldn't be here today if it
Right.
wasn't for some of that stuff. So,
Right.
it's
Yeah.
all for a reason.
That's crazy. How far away do you think it is, from a legislation? Is that law still active where the bank has to know
It's
its
not.
customers? They took that away.
Took it away, right?
Thank
So you
God.
have all these banks that once that
Yeah.
law goes into effect, that's all they're working towards, because those are their
Right.
large commercial relationships. That's where
Right.
bank deposits come from. So it's like, oh shit, we have to figure out now how to KYC all these people and underlying customers, and now they've done away with it, where some banks are like, do we get rid of this? I mean, we did all this work to kind of support this extra compliance lift. Yeah,
Right.
and it's just it's a dance. It's like
Yeah.
trying to figure out, what bank is willing to take on the it's not so much a risk, but just the appetite for risk, right? Where
Right.
you can
Right.
point to certain things to mitigate that risk and know that, okay, this is where the money's coming from, this is who it's going to. You can do things like that, but it's a dance with the banks.
Yeah. Big time. Man, that's crazy. So, do you think like things are still heading in the right direction, or is this something that within next administration gets in and it's just all back to the way it was? I mean, what are your thoughts on that?
Yeah, I think that's something that we talk to our partners about all the time.
Right.
It's like, yes, everything is starting to open up. We're talking to new banks every day that are wanting to do this and bring on, onboard us as an account. But it's like, this is all well and good, but in 3 years, is it going to happen? If the
Right.
administration changes, is it going to happen again? But I think we should be okay,
Right.
just because of all of the traditional finance that, like on the TradFi side of things, you're seeing, these IPOs, these companies are raising capital for ETH treasury and Bitcoin treasury, and all of those relationships are starting to embed themselves into traditional finance and traditional banks. And so I think that all of that over the course of the next 3 years, as the industry continues to grow, I think it should be cemented enough, but
Right.
you never know. I mean,
Yeah.
I've never seen the government come in and shut a bank down for no reason, which our bank was liquid and solvent, and that's a whole other story. But you never know what can happen.
Yeah, hopefully it gets entrenched enough in the next 3 years to where
Yeah.
some of these politicians running are like, "Oh shit, a lot of my campaign funding is being derived from some of these
Yep.
businesses," you know? And then at
Yeah.
that point, it's like it's cemented, right? Like if I shut this down, half the people in my party will lose $500 million of campaign donations. So we got some time, right? We got a little
Yep.
bit of time.
Yep,
It's
and
good.
you are, by the way, you're absolutely correct, because that is what had happened in the SBF type of thing. And
Right.
so SBF had donated to all those politicians, made the industry look bad, and then that's when Operation Choke Point happened, really, is because of the money that kind of funded it was
Right.
just bad money. Obviously, SBF was not, he was a
Yeah.
criminal. But yeah, I think now, again, with some of these TradFi people now having a vested interest, hopefully we're here to stay.
Yeah, we got some runway, at least
Yeah,
3 years. Well, this has been one of the most interesting podcasts or whatever the hell you want to call it, live streams that I've ever done, Ryan. I appreciate you coming on.
of
Is
course.
is there any last words or things you want to say to the 717 community, or, just crypto in general? You have the last word, my friend.
Well, number one, I appreciate you. I know that we've been kind of, going back and forth
Yeah.
since for forever, it seems.
Yep.
But yeah, I mean, you're a great person in this space, and especially
Thanks.
in the virtuals ecosystem. So definitely appreciate you. I guess what we can kind of leave with is we will be having a larger buyback announcement next week, I think, in
Nice.
partnership with virtuals. We'll see what happens there. But we're looking to kind of beef up that whole strategy.
Yeah.
And then in the meantime, I'm hoping to do more stuff like this now that we have some renewed interest, and, people are involved. I mean, obviously, I'm here for it. So
Yeah.
I think we're going to be more involved with the community, and look to streamline buybacks next week. So we'll have more news on that soon.
Excellent. Yeah, it's an incredibly interesting topic. It's nice to get away from your typical, agent tech or, software or platform type stuff. So, again, appreciate it. This is one of the best ones I've done so far. I think everybody agrees. Let's do it again sometime soon, Ryan, for
Happy
sure.
to, anytime. I'm happy to chat. And even I'm very curious. I could ask you a bunch of questions too, and what you see and what you,
Right.
but
Feel free. DMs are open.
I know. So cool. All right, we'll be in touch, and hopefully do it again soon.
Yeah. All right. Well, thanks
Thanks, Nick.
everybody for tuning in. Thanks, Ryan. Looking
Thank-
forward to hearing from you again and doing this again maybe in a month or something like
Yep.
that.
Cool. Sounds
All
good.
right.
Bye, guys.
All
Appreciate
right.
it.
Bye, guys.